In today's video, we're diving into the world of ETFs, exchange-traded funds. I'll explain what an ETF is, how it works, and why it's the perfect investment option for beginners. Moreover, I'll show you step-by-step how to easily start investing in such funds with a savings plan using the neobroker Trade Republic. Let's get started. First, let's define what an ETF actually is. An ETF allows you to invest in stocks in a cost-effective and straightforward way, helping you build wealth over the long term. It tracks a specific stock index and replicates its performance almost exactly. Let's take a closer look at this with a visual example. Imagine you buy an ETF that replicates the well-known American stock index, the S&P 500. With just one click on the buy button, you essentially get a whole shopping cart full of stocks from that index. This means you're purchasing shares in 500 companies with a single click without having to do extensive research. From a time perspective, this makes for a highly efficient investment method. The stock prices of the individual companies in this index are updated every second, leading to what are known as fluctuations. Sometimes the prices increase in value, while other times they decrease. As a result, the underlying stock index also fluctuates, and so does the ETF, since it replicates the index almost one-to-one. Over the long term, meaning at least several years, the strong performers in the index prevail over the weaker ones, effectively outperforming them. As a result, both the stock index and the replicating ETF increase in value over time, ultimately leading to a rising ETF price. As a general rule of thumb, you can expect an average return of around 7% gross per year. Moreover, is an ETF not actively managed by a fund manager but passively controlled by a computer system. This results in significant cost advantages for you, making an ETF not only time efficient but also highly cost effective. Let's quickly summarize the key advantages. Investing in an ETF is time efficient because you don't have to do extensive research. With just one click, you invest in a wide range of companies, spreading your investment across various assets, which significantly reduces the risk of a total loss. Since an ETF is passively managed by a computer system, it is also very cost-effective. All these factors highlight why passive investing with ETFs is a great entry point for beginners in the stock market. Now, let's take a look at how you can find suitable ETFs for your portfolio. To find a suitable ETF, you can use the website Just ETF. Go to the search bar, click on ETFs, and enter the keyword S&P 500. Then, display all results. I recommend sorting the results by fund size and selecting the first option. You will now see an overview of the most important basic data. Click on the Basics category to view more details. Pay attention to the following points. Fund size, it should be in the green range. The larger the fund, the more stable it is. Total expense ratio TER, it should be no higher than 0.5% per year. In this case, the TER is very low, meaning the fund is cost-effective. Inception date, the ETF should be at least 10 years old. In this case, it's almost 15 years, which is excellent. Dividend treatment, check how dividends are handled. In this case, it's an accumulating ETF, meaning that profits are reinvested directly into the fund. This is particularly interesting for long-term investors. Next, let's take a look at how you can actually invest in this ETF. In this example, I'll be using the broker Trade Republic. After logging into Trade Republic, click on the Orders option at the top to access the savings plan overview. Now let's invest in the selected ETF. To do this, we switch back to the Just ETF website, where we have already found our chosen S&P 500 ETF. Here, I copy the security identification number, go back to Trade Republic, and paste it into the search bar at the top. The corresponding ETF will immediately appear. I click on it to open the overview, where I can see the current price as well as the price development over the past 5 years, in case you want to take a closer look. To set up a savings plan, I click the Create button. Next, I choose the interval for the savings plan. In this case, I select monthly. Then I click Next and decide whether the plan should start at the beginning or middle of the month. I choose the beginning of the month and click Next again. Now I enter the amount I want to invest each month, for example, 150 euros. In this example, the savings plan would start at the beginning of April. After clicking Next once more, I check the box to confirm and click Create Savings Plan now. Once the savings plan is created, it will appear under Orders. From there, you can edit it at any time, for example, by adjusting the monthly amount or deleting the plan entirely. In the final section of this video, let's summarize what we've learned and the key takeaways. An ETF is a fund that closely replicates a stock index and is managed by a computer system. This is why investing in ETFs is referred to as passive investing. An ETF offers you the following advantages as an investment. First, you don't have to conduct extensive research. Second, you invest broadly diversified, significantly reducing the risk of a total loss. And third, due to passive management, an ETF is also highly cost-effective. It offers you a solid average gross return of 7% per year, consistently outperforming savings accounts, fixed-term deposits, and bonds. Based on these facts, it can be concluded that this form of investment is particularly well suited for beginners to start investing in the stock market. That brings us to the end of this video. Thank you for staying with me until the end. I hope I was able to explain the world of ETFs to you in all the important details. Remember, investing in ETFs likely offers the best risk-reward ratio of all investment strategies. That's why it's also perfect for beginners to get started in the stock market. I wish you great success with building your wealth and hope to see you again in my next video.